and welcome back to DukascopyTV. Now, Japan is printing money at more than double the rate of the US, equating to 1% of GDP per month. But is this kitchen sink policy really working, and what are the implications? Joining me in the studio is John Hancock. John, thank you very much for coming in. If we think about the Bank of Japan, currency traders were shocked last week by the Bank of Japan's uber aggressive action. They've managed to engineer a huge sentiment shift and big changes in asset prices as well. There's been a huge knock-on effect. But do you think this impact is going to be short-lived, or is it really the boost that the economy needs at the moment?
Good question. I mean, if the Bank of Japan was looking for drama, if the new government was looking for drama, they've achieved it. This was the shock and awe of monetary policy, and you're right, in the short term it seems to have had at least the surprise effect on markets. Whether it will have a long-term impact, for Japan's sake, I hope it does, but I remain skeptical. And let's bear in mind that this is now, we're not just talking about a lost decade for Japan, we're talking about a lost decade and a half and counting. We have had other giant policy initiatives before in Japan, and they've generally run into the sand and the economy's returned to status quo. And I think we also have to bear in mind that even if this has some salutary effect for Japan, if it's good for Japan, it has real potential to be bad for its neighbours and partners. And
that does seem to be the rub. I mean, obviously with Japan weakening the yen, it's helping in their economy, but it's hurting their neighbours, especially in terms of Asia and close around. But the IMF seem to be encouraging the actions. What are the reasons for this, and what side of the fence do you think you sit on?
It's a very good point. I mean, look, we're living in a world of, at least in the West, at least in the industrialized West, slow growth, subpar growth, painfully high unemployment. We're in a world where countries seem to be exporting their problems, or at least hunkering down and focusing on their national interests at the expense of the global interest. And Japan is really, in this sense, just following what the US, the UK, to a certain extent Europe, and others are already doing. Where the IMF fits into this and how they've come down on it, it's interesting. They're hedging their bets. I think it's fair to say that they want to encourage Japan to do whatever it can to stimulate growth or to return to a growth path. At the same time, being the IMF, an institution that was set up largely to avoid a repeat of the 1930s and the currency wars that so destabilized the global economy in the 1930s, they find themselves in the awkward position of saying, well, yeah, this is good for Japan, but what are going to be the effects for other countries? And they've hedged their bets.
Now, at the start of the year, there was a suggestion, however, that central banks had run out of impetus, and that the Bank of England, to take one example, were even looking at negative interest rates because QE seems to be sort of null and void. So is this a game changer with the Bank of Japan, would you say?
It's a game changer in the sense of it being dramatic, but is it different than what we've seen the United States and the Bank of England and others do? No, it's not radically different, but it is uncharted territory. All of these banks are these central bankers and finance ministers are pursuing what is euphemistically described as unconventional policies. You know, that's a gentle word. These are a big experiment in international economic policy, and in that sense, I think again, if you follow what Christine Lagarde recently said on Japan, the IMF is watching this with some degree of caution, as are others. I mean, we don't really know what the unintended consequences of this policy will be. Is it going to cause asset appreciation and inflation in areas that we haven't even paid attention to? It may not be that our DVD players are suddenly going to go up in price because Japan is driving down its currency or flooding the market with capital, or that the price of bread is going to go up, the classic measures of inflation. But look at what's happening in weird markets like Bitcoin, for example, or in certain isolated commodity markets, or in emerging market currencies. The liquidity is going somewhere, and I think there are concerns that when the radical policy has run its course, who's going to mop up this liquidity?
It does seem to be this sort of innate need to fix things. But if you think about it, I mean, in terms of Japan, again, the previous governor, Shiroaka, he shied away from the risks associated with such a massive attempt at stimulating the economy. One of them is that rising inflation and indeed the higher interest rates will push the burden of servicing Japan's debt. If we look at the figures, some 240% to GDP. And perilous levels, really. Another is that wages will not rise to these inflation targets, the 2% that they're so keen to achieve. So if we take on this, has the pressure on the Bank of Japan been well placed since Abenomics have sort of kicked in, do you think?
Well, these are complex questions, but you're right, Monica, to focus on this whole question of what I would call almost the stealth issue, which is debt. I mean, one thing these policies, whether it's in the US or in Britain or in Japan, will more than likely achieve is a kind of inflating the debt problem, maybe not away, but at least diminishing it. I mean, all of these countries, and in particular Japan, we forget Japan, sits with a huge national debt. If you debase the currency, if you pursue this explicit pro-inflation policy, one stealth outcome will be to benefit borrowers and penalize creditors, people sitting with the debt. And one way to solve your debt problem is to inflate your way out of it. And it seems that's one of the objectives of these policies.
Now, despite all this furore that we're talking about, there has been some suggestion that it won't be quite the swing in economics that some people are hoping for. If you think about the ageing population and limited population growth, and it will mean that Japan's ability to expand won't be enough to kickstart the rest of the global economy. What do you think about this?
Yeah, I think that's a very good point. I mean, it gets back to this basic problem that our central bankers, they're not magicians. I mean, they can't wave a magic wand and perform miracles on an economy that has basic structural problems. The economy is bigger than governments and banks. And in the case of Japan, it's got real problems. It's got an economic model that was ideally designed for catch-up economics, for adopting other people's technology and replicating it more productively and more cheaply. That seems to have run its course. It's not particularly well suited to this kind of agile world of Googles and Facebooks and Instagram. Even the arrival of a juggernaut like Apple seems to have displaced the great Sonys and Yamahas and the Japanese industrial giants. And then there's this basic demographic problem. I mean, demographics may not be destiny, but it's important. And Japan has very low fertility rates, a fast aging population, and it's very difficult to compensate for that. I mean, if you were going into the Olympics and Team China or Team India was fielding a bunch of swimmers who were 18 years old and Team Japan was fielding a team of 50-year-olds, it wouldn't be too difficult to see who would win that race. And in some sense, the Central Bank of Japan is trying to wave its magic wand in the face of very deep structural problems. Again, these are problems that will work themselves out one way or the other, with or without the help of government, but government can't defy the laws of gravity.
It does seem a case of delaying the inevitable, but thank you so much for your insights, and it's been a pleasure discussing it with you today.
Thanks for having me.
Thank you. Well, that's all from John and myself. The trading week is nearly over, but the TV team has plenty more to bring you, so please do stay tuned. Bye for now.